This has been one of the most challenging periods for the world in living memory. Now, the end of the pandemic is coming into view. Across many countries, the vaccine rollout is now well advanced. And slowly but surely, economies the world over are headed for a full reopening. As we look forward to regaining more freedom and normality in our lives, we also think it's time to think deeply about the way ahead in our lives and in our portfolios. Will the new economic cycle last a long time? Is the world simply returning to the way it was before? What should your portfolio look like when the pandemic is over? And what should our return expectations be in the new economic cycle? In Mid-Year Outlook 2021, we present our answers to these and other vital questions. We also set out important actions to prepare your wealth for what comes next. Long before the arrival of effective vaccines, we made the case for a full recovery in the global economy. Particularly in the U.S., policymakers acted decisively, supplying unprecedented fiscal and monetary stimulus to create a bridge over what could have been an absolute economic disaster. Stimulus and vaccines will end the deep recession of 2020, and we expect a robust recovery continuing for several years. U.S. consumers are spending their stimulus checks on goods, which will boost producers both at home and abroad. Everywhere, we see pent-up demand for activities like dining out and taking vacations. This sets the scene for a recovery boom for industries such as hospitality and travel. But the recovery process is happening at very different speeds around the world. Put simply, COVID will likely take longer to be eradicated in some countries and regions than others. In our view, this creates potential near-term opportunities for investors. The pandemic and its unprecedented economic shutdowns caused major distortions in financial markets. Many investments that were most affected by COVID restrictions saw their valuations drop well below long-term averages. We have therefore argued for exploiting mean reversion, building exposures to those securities hit hardest by COVID and riding the subsequent rebound. This approach has worked well, with many sectors powering back from last year's lows. But although the strongest gains are now behind us, we believe that there are new profit opportunities just ahead of us. So while we've shifted away from the likes of U.S. small-cap equities, which have recovered most fully, we see continued gains in segments like global real estate, and we are changing our asset allocation to reflect the different paces of recoveries around the world. For example, Latin American equities are pricing in too much bad news, so we are attracted to markets like Brazil. We also see ongoing opportunities in Europe and the UK, as well as in global healthcare and dividend growth shares. None of these shares have normalized yet. As the economic recovery continues to play out, we believe that long-term bond yields will press higher. And for that reason, we still have a large underweight in such bonds, while we've added to floating rate bank loans, which could do better in this type of environment. We also believe that the world after COVID will be rather different than it was before. As we explained in Mid-Year Outlook, certain changes during the pandemic are likely to endure well after the virus is defeated. Many governments have now rediscovered an appetite to tax and spend, with big investments in infrastructure and industries likely. This is especially true in the U.S., whose economic competition with China seems destined to intensify over the coming years. We think the strategic engagement between the G2 powers could benefit portfolios that are positioned in both markets. Meanwhile, the race to develop effective vaccines broke new records for speed. This highlighted the impact that technology has had on the biotechnology industry. We expect that knowledge gained before and during the pandemic will serve as fuel for investment and growth in many healthcare sectors. We expect many new treatments for old age illnesses. And at the same time, we think that greater digitization is here to stay. Businesses and consumers alike have discovered new efficiencies from embracing technology during the pandemic. As internet connectivity continues to proliferate, we expect this to accelerate further. The unstoppable trend of digitization could have far-reaching effects on industries well beyond technology. In real estate, for example, we identify potential opportunities among properties that enable the digital economy. As well as bringing lasting change, COVID may also have given us a glimpse of future changes. The collapse of fossil fuel demand and energy prices that occurred during the first lockdowns was both dramatic and unprecedented. But we believe that it also may be a preview of what happens when clean energy takes over from traditional energy. These are truly unstoppable trends, and they should be in your portfolios as the world changes. As the end of the pandemic approaches, we see many opportunities and challenges. First, we want clients to be exposed to the cyclical recovery from the COVID recession. Thereafter, we look to exploit the trends that will keep reshaping the world beyond COVID. Many of the investments that might do best in the year ahead aren't necessarily the ones that we're going to hold for the longer term. We want client portfolios to evolve and change to reflect the economic realities still to come. Is your portfolio positioned for recovery and what comes afterward? Let us be your partner and guide as we travel to the post-COVID economy.